What's good, traders? Welcome to another day in the bootcamp. If you're new to the channel, make sure you like and subscribe. If you'd like to join my community, make sure you click the link in the description below. So yesterday, or the day before actually, because yesterday was Christmas, but the day before, we spoke about prop firms and how your mindset should be when it comes to these prop firms and how you should look at prop firms, because yes, they are a huge gateway to success and they're amazing, right? However, there are a lot of loopholes and there are a lot of things that you need to understand. So today we're going to go based on the strategy that I used, and this strategy isn't like a entry or exit strategy. This is a whole round mindset, psychology, and how I, based on risk management, traded to pass majority of the prop firms. Now, I didn't pass, like reality is you're not going to pass the first time. I didn't pass the first time, even though I was a profitable trader. The reason why you don't pass the first time, or even if you are profitable, the reason why you won't pass the first time is because of your psychology and mindset. The thing is with prop firms, they are throwing out large amount of capital to you guys, and not all of us are ready to trade large capitals. I look at trading like a game where like you can't go to like boss level until you've gone through the lower ranks, right? So for me, it's like, you need to understand how to trade $1,000, $5,000, and then go to that 10,000, 20,000, and then 100,000. So when it comes to the strategy, I would advise you that before you actually look into prop firms, make sure you have a track record. Make sure you know that you're profitable. If you don't feel like you're profitable, like deep down in your heart, if you don't feel like you're profitable, prop firms are going to be your nightmare. And it's going to take forever to pass your first prop firm challenge. Now, prop firm challenges are not that difficult. They have very, very simple rules. However, most traders, they make it super difficult and they make it very, very hard for us to, for yourselves to basically pass. But after today, hopefully I'll be able to make it very, very simple. I'll be able to show you insights and we will have a game plan on how you will trade using prop firms. Now, the numbers and percentages that I use are not on one specific prop firm. Obviously, every prop firm has different types of limits and different types of instruments that you can trade. So make sure every information I give you, don't just take it word for word. You actually go and do your own knowledge finding, and you actually research yourself. Okay, so when it comes to your prop firm strategy, like I said earlier, we need to, first thing first, I'm just going to put this as 18. First thing first, right? We need, right, let me just do this. There's a set of rules that you need to have, okay? So number one, you need to find reliable prop firm, okay? You can't find a prop firm and it's not reliable. If you find a prop firm and it's not reliable, you're basically working on a demo account for free, or you're paying them for free and you end up gonna get scammed or not get a payout. So make sure this prop firm is reliable. So that means number two, do your own research. Okay, I can't stress this enough, guys. You have to do your own research. If you don't do your own research, you are going to end up losing your money and also wasting your time. You do not want to waste your time. So these are the first two rules that I'm going to set for us, and I'm just going to put it on the side so you guys can just always have a look, right? But you need to find a reliable prop firm and you need to do your own research. Now, most prop firms, guys, they give you a limit that you have to trade within, right? So let's say, for example purposes, you have a $10,000 account. Now, this $10,000 is not just money that they're giving you. There is a challenge. There is rules, right? So the first rule that they set you is you have a 5% daily drawdown. Okay, that means in this instance, you can't go below $500. Okay, if you go below $500 within a day, right, you have lost this challenge. And then they also say And this is just example. If your prop firm is different, just put X percentage daily drawdown and figure out what the X is in dollars. And then they say 10% drawdown and you're out, okay, which is around $1,000. Okay, so this is one way you could lose. Okay, this is one way you can lose. Okay, 5% daily drawdown, 10% drawdown as it is. What that means is it doesn't matter if you do not do this 5% daily drawdown. If you trade 1% every day for 10 days straight and you kept losing, you end up blowing this account, and that's it. And this is just how challenges are. You got to follow this, okay? But with the strategy I'm going to give you, you will not need to worry about this. Obviously, if you're not a profitable trader, you will hit drawdowns very, very fast. However, with the strategy I'm about to give you, you will be able to not worry about this, okay? There won't be any fear. And then obviously there are other rules as well when it comes to the prop firm. Again, make sure you do your own research. If you don't do your own research, you are going to maybe potentially blow your account, or maybe potentially get that email where you're saying, you know, you breached the rules and you've lost a prop firm. So make sure you, please guys, make sure you do your own research and read the rules thoroughly. Do not purchase a prop firm challenge until you've read the rules. Okay, after you read the rules, then you make a game plan. Once you made a game plan, that's when you buy the prop firm. Okay, so we got $10,000. We understand that we can only risk 5% on a daily basis and 10% drawdown. Now, to pass, right, to pass, they want you to get, I think the first challenge is around 8% gain, or 8% profit target. Okay, and that would be around, in this instance, $800. Okay, and then they also say get a 5% profit target. This is if you're going for a 2-step, or if you're going for a 3-step. I'm not too sure what it is, but I know 2-step, majority prop firms use it. If you're going to a prop firm where it's only asking for 1 step, it'll be different rules again. If you're looking for a prop firm that just instantly gives you funding, that's a whole different rules as well. So make sure you, again, check this out. This is for a 2-step prop firm, okay? And then 5% is an additional $500, okay, dollars. Okay, now, before we get into this profit target, okay, I need you guys to understand these are 2 separate tests. Two different phases, okay, of the evaluation. So even though they are one whole, you don't just make 1,300 in this case, or is it, yeah, $1,300 in one go. You can't do that, right? You first make the $800, then you get a fresh account, then you make the $500, and then you get another fresh account, and then you now are past that challenge, and now you can trade with the $10,000. Okay, that's how it works. So don't think that, oh, I have to make $1,300. I'm gonna find a setup, get a 1 to 13 risk ratio, for example purposes, and then you're like, okay, I'm just gonna hold this trade, because that trade will be useless because you only hit the first 8% profit target. Okay, and the reason why I'm saying this is because I actually fell for that. Okay, I was so close to my first profit target, and then I was like, okay, next trade, I'm going to go for another, 1 to 3, 1 to 4 risk ratio. And then I thought, okay, that will get me to $1,000. I'll basically be down 8% plus halfway through 5%. And then I ended up not even getting the rest of the money that I made in this. Okay, so depending on your profit again, but I would advise that just keep them as separate. Even if they do put them together, treat them as separate targets. First go for the 8%, then go for the 5%. Okay. So now we understand that we have 2 different targets, right? We have the 8%, 5%, and this is to win. Okay, this is to win, this is to lose. Okay, as you can see, to win is less than to lose. Okay, so you have to lose $1,000 to lose, but you only have to make $800 to win. Again, we're not calculating these 2 together. Okay, so that makes things way more easier for us. Okay, so on the winning side, how are we going to win, Moby? Well, that's a very, very good question. There are set rules, set strategies that you have to go through to win this challenge. Okay, and the first thing I'm going to tell you guys is And I'm just gonna make straight like here. Forget about the the total drawdown. Only focus on the daily drawdown. Okay, what I mean by this, okay, is I'm not saying that you guys should ignore the 10% drawdown, but what I would say is don't expect, I don't trade as, okay, I got $1,000 to try and trade this account. Don't think like that. Think of it as I've got $500 and I got to make $800. Okay, the reason why I say this is because you instantly, your mindset shifts to not risking 1,000, but you're risking $500 to make $800. Okay, so that makes things so much more easier. And when I did it, I did exactly that, where I only focus at the $500, because a majority of us look at the $1,000 and then they will say, okay, you know what, I'm going to risk like 2% or 3% per trade, because that's still below the 5% daily. But the thing is, 3% is like, okay, 3 trades and you're already close to 10% drawdown. Whereas if you look at the $500, you can still potentially, and you know, in further on this video, you'll understand why I say this, but you could potentially only risk the $500 and still reach the $800 profit target. Okay. The next rule, guys, the next rule that I would say, okay, which is very, very important, is only go for 1, 2, 3 RR. Okay, only go for 1 to 3 RR. Okay, now the reason why I say this is because a lot of us, when it comes to prop firms, we try to go for a quick, we want to make as much profit as possible. I understand, but this prop firm challenge is not for you to make money as quick as possible. This is to test if you are a profitable trader. So if you guys are looking at the market and you guys are seeing that, okay, I'm going to go for 1 to 1 or 1 to 2 and you're hitting crazy profits, that's really, really good. But you're going to have to look for multiple setups. Whereas a 1 to 3 risk to ratio gives you a really nice foundation to your prop firm. And the reason why I say this is because let's say you do win your first trade, you're already almost halfway through your challenge. So what I mean by this, guys, if I was risking 1% and I made 3% in my first trade, think of it like this. You only need to now win another 2 times and you've hit that 8% profit target. Okay, so try and only go for anything above a 1 to 3 risk to ratio. Now, one little bonus tip is if you can hold your trade, obviously move your stop loss to break even, move your stop loss, make it a trading stop loss. But if you can hold above a 1 to 3 RR, that's even better. Yes, it will take a while for this trade to go on, but the longer you can hold this trade for, the better it is for you as a trader, the better experience you're going to get with this prop firm. So like I said, try and go for 1 to 3 RR, but if you can hold this trade to maybe 1 to 4, 1 to 5, you're doing amazing, okay? And lastly, right? Lastly is only risk 1%. Now, this is a little bit high, right? Because that means that you literally have 10 trades and you're out, okay? Or 5 trades and you're out, okay? But why, the reason why I say only risk, and I know this looks a bit funny, so I'm just going to put this one a little bit lower, okay? Only risk 1% because if you go for 1 to 3 RR, you have just made 3% if you won. Okay, if you lose, you've only lost 1% and you still got a few more days to kind of push it back up, especially if you're a profitable trader. However, if you go for that 2% risk, which I normally do on my personal account, I go for that 2% risk. If you think of it, 2% risk is, in this case, $200. Yes, if you pass a 1 to 3 RR, you're 6% up, but there's no rush. There's no rush. And I do say on the first evaluation, you want to kind of go as heavy as possible. You want to make as much money as possible and try and skip that 8% because 8% is the hardest one. Once you made this 8%, the 5% is much more easier, like way easier, guys. Yeah, because $800 is the hardest. Making that $500, it gets a little bit easier and you can slow down the process a little bit. And you have that cushion because now you know that you've already passed the heaviest one, right? So risking 1%, yes, it makes the challenge a bit longer, but it's safe. And the reason why I say this, because at the end of the day, guys, most of us that are trading prop firms, we don't have the capital to just keep purchasing prop firms. If you do, then yes, try and get that 8% profit target complete as fast as possible, and try and do it as fast as possible, 100%. But try and risk only 1%. If you are a profitable trader and you're super duper confident and you see a setup that you know is going to hit your profit target, yes, go for that 2% 2% risk, right? Or 1.5% risk if anything. But I wouldn't go anywhere below 1%. Why? Because it's a prop firm. It's a demo account. I know traders that try and do 0.5% risk, and it takes forever. It takes months and months and months to pass this prop firm. I would state that 1% risk is a sweet spot, because you are rolling with that. You won't have to go ever near the 5% daily drawdown, and also it will take 5 consecutive losing trades for you to get to that $500, or halfway between that 10% drawdown. By then you would know, and then you can take a break, and then you can continue once you find profitable setups again. Okay, but I would say these are the 3 focuses that you need to do. Okay, so forget about the total drawdown, only go for 1 to 3 RR, and only risk 1%. Now there's more, guys. There's more things I'm going to give you. Okay, more gems. So if you're still watching, don't worry, I'm going to give you more gems. Okay, now always, guys, always have a rotation with your account. Okay, now why do I say this is because, let's say, sorry about that, guys, my camera switched off, but we're back. So the reason why I say have a rotation with your accounts is because you guys need to understand. Let's say I had a $10,000, another $10,000, or a $20,000 account, and then I have my personal account. I have 3 accounts that I can kind of rotate. So let's say one week I had a terrible week and it was, terrible, and I ended up losing, let's say, 2% on the first account, the first $10,000 account. Then next week I can go to the next $10,000 account and say, okay, you know what? I'm going to trade this $10,000 and I'm going to try and see what I get for that week. Let's say that week I'm up 3R, so now I'm 3% up, and then now I can go back to the other account and use that momentum on the second account and kind of say, okay, you know what, I'm down 2R, let's see what I get, and continue going like that. And so doing that helps the psychology, because now when you are down 2R, you're not worried because you have another $10,000 account, or you have your personal account. So always have a rotation with prop firms. Don't just trade one prop firm and say that this is it. This is what's going to get me clear. It's not, okay? It will take a little while. It won't just be a straight away action where you get your first payout. You need to go through these systems, okay? And secondly, guys, like, actually understand this as an investment. Like, literally put it in your brain. This is an investment. I might not pass the first time, which is completely fine. If you do, congratulations. But this is an investment. This is going to teach you how you would be on a $10,000 account in real life. Okay, if you are trying to go for 100K, same thing. It's going to teach you that this is how you would be on a 100K account. Okay, I did the maths. It's like you have to pass, like, you have to go through like 13 prop firms in order to be break even, so make your money back on your first payout. I think that's more than enough. That's like 1 prop firm a month. I think that's more than enough for you guys to get as much data, get as much comfort. It took me like around, I think, 6 prop firms to actually pass my first one. And after that, everything just became easy, because that stress, that, weight on my shoulders, I got rid of it, because like I finally passed my prop firm, and now I can, enjoy I can go through the prop firms now and enjoy the process, rather than being stressed and thinking that this is it. Guys, prop firms are not going to be your the holy grail. Is not going to be the main thing for you. What prop firms are there for is to increase your capital, and so you can put it into your personal capital and trade your personal capital. Don't expect prop firms to be there forever, but don't have that fear of missing out. So don't pressurize yourself to trade. Prop firms have been around for like 4 years now, right? I've been trading for 5 years, and I think it's going to continue. I think more people are going to open up prop firms and keep going. I think, probably correct me guys in the comments down below, but I think prop firms been there for quite a while, right? And so in 4 years, I think if you'd put in 4 years, right, I think you would have passed your first prop firm at least, okay? And once you pass the first evaluation, you can slow things down. You can lower your risk. You can, go a little bit slower. But the aim is to first pass this first phase, then goes to phase two. Once you've done phase two, once you've done phase one, it's like a load of weight off your shoulders, because making $800 is hard. That's like around 3 trades, right? 3 trades. So 1 to 3 RR trades to get that 8% target. So it is going to be hard. It is going to be very, very difficult. But once you've done that, think of it like this: like 5%. Well, if you pass 1-3R or 1 to 3R, you literally can go for another trade, and once you hit that 5% profit, you can just close the trade and you pass second eval, right? So within 2 trades, you're basically done. So very, very, very easy strategy, guys. Very, very easy. And I think if you focus within this, I think you guys will be able to clear out your prop firms and really get payouts as soon as possible. Because I know a lot of us, we don't have game plans. If you follow this game plan, you will be able to, pass your strategy, pass your prop firms. Okay. Now, the last thing I would say is make sure you have data and make sure you are a profitable trader. This won't work if you're not a profitable trader. And I need to make this in bold, okay? Make sure you, let me put it in capital letters for you guys. Make sure you are a profitable trader, okay? The reason why I say this is a lot of us, and I'm actually going to put this in another color so you guys can really notice it, okay? Make sure you're a profitable trader. Why? If you're not a profitable trader, there is no reason for you guys to try prop firms. Use your own capital. Don't be putting in $400 or $200 or $100 in the prop firm challenges, because you're not going to pass it if you're not profitable. If you have and I think personally, if you have 3 months of, that's a quarter of a year. If you have 3 months of data and it says you're profitable, go ahead and do a prop firm challenge. So if that means 2025 is around the corner, if that means the first 3 months you use a strategy, you become profitable, right? Profitable doesn't mean you made $1 million. Profitable means that you're consistently reaching profits. Now, you can have if you use 1 to 3R, you can have like a 40% win rate and still be profitable. So make sure you have the data, you have a look at your data, you see the stats. Am I profitable? Yes or no? Yes. Okay, I'm going for prop firm challenges. Because if you're not profitable, you're going to realize that prop firm challenges are going to eat you up. Because prop firm challenges, the prop firm, the way they market, guys, is they only target unprofitable traders. They want unprofitable traders to trade. Why? Because they want you guys to believe that if you have more capital, it'll be easier. It's not easier. It's the exact same process if you have a $100 account, okay? If you think about it, right? If you had a $500 account, right? Technically, this 10K is not 10K. You don't have the whole 10K to trade. You actually have $500, right? You have $500 to trade. You don't have $10,000, right? Because if you had $10,000, cool, I'm going to risk 20%. I'm going to make the 50% growth. So that's like $5,000 in one single trade. Wow, amazing. But you can't do that, right? So even if you had like $500 on the side, put like $250 in, say, okay, cool, I'm going to try and reach, okay, maybe not $800, but I'm going to try and reach $400 profit, and then see how that is, right? Obviously, different percentages, I understand, but you guys get the gist of what I'm saying is that you actually don't have the full $10,000. That's just the facade they give you, right? The reason why you need to forget about the total drawdown is because you don't actually want to even get close to $1,000 in drawdown, because then it gets harder. If you get to, let's say you get to $900 drawdown, you have to make $900 plus the $800. So now you have to make like around $2,000 to even be getting past stage one. So make sure you guys forget about the $8,000. As soon as you hit that $500, take a break, go and get another prop firm. Try again, keep pushing, right? Have a rotation, only risk 1%. Only go for 1 to 3 RR. If you do get close to this 10% drawdown and you only risk 1%, you're not a profitable trader as of yet, or you've had a bad run. You just need to take a break, You know, I think prop firms give you 30-day break. Take a break, maybe purchase another prop firm, or practice on your personal account. Once you get confident again, go back on the prop firm, kill it, right? 2025, guys, is your year, right? And the only way you can make it your year is going through your system and being strict and being disciplined, guys. Every single one of you that followed this bootcamp and made it to here, we're almost near the end of the bootcamp, guys. Every single one of you can succeed the prop firm. I'm giving you all the value that you need to pass prop firms. I've given you all the value to make sure you're a profitable trader. Now it's up to you guys whether you want it or not. You need to stay disciplined, you need to stick to your rules, and you need to stick to your system. If you don't follow your system, what's going to happen is you're going to go in a cycle of doom, which means that you're just going to keep failing. You don't want to fail as a trader. You want to be a successful trader. You want to be profitable. And I know you guys do want to be at that level where you are profitable, okay? You just got to follow the rules, follow your system, and follow everything that I've told you today. And yes, I might not have shown you your strategies and stuff like that, but that's you pretty much inputting strategy into prop firm and using these rules instead of the 2% risk or 5% risk that I said to you guys. And going through this will make sure everything becomes easier. So that's pretty much it. I'm going to wrap it up for you guys. I don't want to blabber on too much about prop firms. I think you guys get the gist, and I think you guys will be able to succeed. If you succeed your prop firm, comment down below, hype up everyone else, let them know that is real and it does help, because prop firm challenges really do help, guys, and it can change your life, guys. Okay, so comment down below if you're already pass a challenge, to motivate others to keep going and keep trying, and let us know your story, guys. Okay, guys, that's pretty much it. Make sure you subscribe, like this video, and I'll see you guys in the next day of the bootcamp.